So this is the 30-period look back. So we're just going to mark that off. And the range of normal on this for the current bar finds this range of normal between, actually I should tighten that up just a little bit. Yeah, between +1 and -1. Fully 2/3 of the price action of the last 30 days is contained inside this average ±1 standard deviation. And that makes these indicators of abnormality way out here. Here's one that went all the way out to Z3. Here's one that went to Z2. What that difference between normal and abnormal does is tell us extreme cases, and then reversals from extremes, as you can see, become very interesting. So here's one where it already had an excursion outside of the river, so that was abnormal. Then it gapped up, but then sold off sharply all the way to Z-2, and then you had a move from 206 all the way up to 236 in about 7 days. That's a 15% move. And then another 15% move that brought it all the way back down here after it reversed outside of the, in fact, it got all the way to Z2. So there's very little data. Only 0.5% of the data is out here beyond Z2. And that goes into the mathematics of computing standard deviations, all that. So the river gives us the range of normal. Now, what I want you to realize is that although these are drawn as lines, they really represent a series of thin slices, so that each day, you drop off one price and you add a new price, and then it recomputes all the math and then plots the points for average, ±1, 2, and 3. And then it draws a line as if that's a continuous signal. So it approximates that, but it really is like a z-scored ladder that is redrawn. So there's Z+1, Z+2, and then Z+3. Now I draw the Bollinger Band mean as that dashed red line because that's the centerpiece. That's the mean that everything reverts to. And then I draw the outer Z3 lines as thick red lines because that's going to contain like 99% of all the data of the look back period. In this case, it violated just right in here, that one little piece on that given day, right? So any move beyond Z3 is abnormally abnormal. Now that sounds kind of funny to say it that way, but you got to realize that between Z1 and Z2 is like a normal abnormal. So it left the river, but it moved out to the floodplain. So that happens with some regularity. In the last 30 days, it happened 3 times. And when it reversed, it was significant each time. And then the further you go back, you would keep seeing that to be the case. Anytime price leaves the river, it becomes abnormal, and that's good because there's a real directionality to it now. And now here was a chance that it couldn't hold that any further and violated the edge of the river, became normal, came back to the mean like it should. That's the reversion to the mean that we talk about. And so in a long trending move, it's not surprising to see that strong bullish trend occur. That was sort of indicated by the willingness to get beyond Z3. And then you had this nice long run and came back, checked in at Bollinger Band mean. Is it going to fail? No, it's going to start the next leg up. And that was half as long as this one. And it came back to the Bollinger Band mean again. And it came back to the Bollinger Band mean again. Now this time, you notice that the excursion didn't last very long, didn't even get out to Z2 like it did the previous time, And now you can start saying, hey, the ability of the traders to move it away from the mean is a measure of their strength and conviction. And when this could not make a new Z2 excursion and started to fail, it's not surprising that it comes back to the mean and then fails to the downside. Then, because longer term, that's part of this great upward move. Oh, that's an opportunity to buy it. And then all that buying pressure drove it back through the mean and then back to Z2 again. But now I'm noticing we're getting this oscillation. That's not good. Now we're starting to get more choppy and sideways. And now notice the slope of the river. Back here, it was kind of flat and sideways. And then when you get this series of higher lows and the excursion to the downside, this time could only get to Z1. This time it got to Z3 and then blasted up to positive Z2. Well, that's good. That's an argument for the Kata 2 entry. And now this thing blasted up to Z3. So you really like to see this 1, 2, 3, and go. And now it's leapfrogging to the Bollinger Band mean. But now when it couldn't make a new high, pain. Got to Z2, pain. So you can feel how in the last 30 days, that previous really strong trend in IWM is starting to decay. Now, it has fought its way back to the middle of the river where it is stable. This time it could only get to the Bollinger Band mean. It couldn't even get out of the river. But this time it didn't even fail out of the river. So now what's happening? You're getting a sideways quiet channel and everything is compressing inside here. Now, failure to fail is information, but failure to follow through is information. So now we actually have a different characteristic market type in here compared to this wonderful upward move that we enjoyed for 6 months. And now you can notice that the distance between the Z3 lines, which was wide during the trend, is now starting to compress and the slope of the river is getting sideways. So we've clearly entered a sideways quiet channel after a strong bullish move. And now we can say, what's the next move out of this train station? I see a low and higher lows. If it gets above 230, now it feels like it's going to do this. If it can get above 240, it will have exceeded the Z3, and that would be a very strong signal, much like this signal back here. When it was able to exceed the Z3, that was good. And in fact, if you go back even further, the last time this was in a sideways channel and the Z3 lines had pinched, the first move out of that Z3 was here, and then you get a higher low compared to this low, right? So you get the higher low, and then the beginning of this nice, long, powerful move. It doesn't predict it, but it describes it. So what we're facing here is the beginning of this next kind of that sideways channel. So we see coming out of COVID, this thing has gone through periods of big gains, consolidation, then the breakout from Z3, not so much. Yes, now it works. And so you get this next leg. So we can use the, just by watching the Bollinger Band means and envelopes and the slopes, we're getting a feel for market conditions based on volatility.